All right, guys. This is from the nutshell. It's it's double-sided. It's 4 pages. Yes, the regulations I think are very useful. The regulation I call to your attention. The book a little less so, in my opinion. But this little handout just gives you a quick idea. If you look to the first page, it's entitled Separate Shares. There's a little bit of what it's about. And if you look on, it's page 179, in the first paragraph there. It illustrates the operation of the separate share rule. Suppose the trust provides for 2 beneficiaries, A and B, share equally in distributions of income and corpus. It's the trustee's discretion to determine timing and amount of distribution. In a year in which the trust has $600 of D&I, the trustee exercises his discretion to distribute $300 current and $300 of corpus to A and nothing to B. So at least in theory, it looks like A is getting $600, which, by the way, in the absence of the separate share rule, would be taxable entirely to A. It says, in the absence of the separate share rule, the distribution will carry out $600 of D&I to A, would therefore be liable on the tax on all the trust's current income, even though 1/2 of the income actually is accumulated for future distribution to B. Separate share rule of 663C avoids this unfortunate result by requiring that D&I be computed separately to the beneficiary's respective trust shares as if they were separate trusts. Accordingly, A's share of D&I is limited to $300, corresponding to her 1/2 of the share. She's taxed only $300 of her $600 distribution. The rest of the distribution is neither deductible to the trust nor taxable to A. Since the trustee made no distribution to B, the remaining $300 of D&I is allocated to B share, is taxed to the trust, and resulting tax liability should be charged against B shares. Just a very simple illustration of the point. Okay, we're going to go, when we look at these problems now, guys, you'll see this point being made. So if you can, open your textbook, page 186. Look at problem 3-16. By the way, if you guys are interested, we all missed it except for one person in this room. Young Hung went to the light show. Light Fest in Pennsylvania. Where in Pennsylvania? I don't know. So she showed me a video on her phone of this, where all the lights, what is it? Is it candles that are going up in a...
Yeah, they have some lighting and stuff.
Lanterns, yeah,
lanterns.
The only thing is, I'm thinking, isn't that a big fire hazard?
No, it's going to light up after the supporting stuff like burn out. It's like
They burn out, but suppose it lands lit.
They put some like
I don't know. Think about that. Maybe that's not the brightest idea, no pun intended. Anyway, on the video, it's quite pleasant looking. Okay, let's get back to page 186, problem 3-16. A testamentary trust is required to distribute all of its income currently to the testator's wife. However, the trustee is authorized to pay principal to one or both of the testator's wife and son. Okay? So again, in my visual, where EK is my wife, she's getting, and Jen is the trustee, Harsh is her son, right? I'm requiring all the income to EK. Jen's got to pay all the income, but she can make distributions to EK and Harsh, right? Everyone understand what's going on here? In a year in which both D&I and the fiduciary accounting income equal $50,000, the trustee distributes $50,000 to the testator's wife, that's EK, and Harsh, lucky you, you're going to get a check for $25,000. None of the trust income is tax exempt. What are the tax consequences to the trust, the wife, and the son? So we have 3 different taxpayers. Come up with some numbers, what you guys say. The 3 should be taxed though.
Are all tier 1?
All in year 1.
No, tier 1.
Are they?
Should we assume that they're all tier 1?
No. Well, the son is not tier 1 because the income is not required to be distributed to him, right? Right?
Does it say that? Oh, yeah.
So, Young Hung, is the light on you? Who should be taxed somewhat here?
I think the wife for sure, because.
Just give me numbers and then Karen, see if you agree.
$50,000 for the wife. I think that's the only one.
Just say it loudly, you faded.
I think that's the only one because $50,000 to the wife, because that's the only one because it reaches to the cap for the BMI amount.
Karen, agree or disagree?
I agree, yeah, wife is the only one being taxed.
Okay, wife is tier 1. Son is tier 2. Everybody agree? Wife's distribution absorbs the entirety of the D&I, leaving no D&I for the son. Everybody got that? There's no tier 2 distribution here. Jen, you got that?
When you're tier 1, there's nothing. For tier 1, when you get the money and you're tier 1, there's nothing else distributed for, there's nothing else to be distributed for tier 2.
Well, Harsh is getting $25,000, right? Isn't he getting a check for $25,000?
But does the 50,000 that represent all D&I?
That's the entirety of D&I, right? That's the maximum under 662. That's the maximum that someone can be taxed on, right? Agreed? So that tier 1 absorbs the entirety of the D&I, leaving no D&I. Now, Harsh is still going to get $25,000, but that's a distribution of principal, right? Everyone agree? And that is not subject to tax. So the trust will get a $50,000 distribution. Distribution deduction. What's my authority? Code section 661A1. 661A1. EK has income of $50,000 under 662A1. Notice. There's a deduction, tier 1 deduction. There's a tier 1 inclusion, right? Everyone loving the symmetry? You guys feeling comfortable? Let's see how comfortable you are. Assume the same facts as 3-16, except this time the D&I of the trust is $65,000. Julia, Jessica, what do you say here? Who gets taxed on what? What's the deduction to the trust? Julia? Jessica? Any thoughts here?
Distribute up to the D&I, right?
I'm sorry?
Don't distribute.
Well, we have $75,000 being distributed. What deduction is permissible under 661? Just say again, Jessica? Okay, why? And Julia, do you agree? John, do you agree? So yes or no, John? Okay, why? Say again?
For 660.
What's the deduction code section here? Dustin, what code section? That's an inclusion section. What's the deduction section?
661.
661, right, Carlo?
Yeah.
How much is it under 661?
Yeah, to the entire amount, right?
But can you break it down? Give me a tier 1 number.
50.
50. That's under 661A1. What's the tier 2 deduction? 15. 661A2.
Even though
So say it loudly.
what about if he receives corpus? Because there's no
He
name.
did.
And
That's
he-
why
he's
the,
not
the,
gonna do that.
that's why the trust is being limited to $15,000 tier 2 deduction, right? The other 10 is corpus distribution, right? There's 75,000. EK's running away with 50,000, right? EK, you happy? You got $50,000. Harsh, you happy? You got 25. So you're happy. And guess what, Harsh? You're only going to be taxed on 15 of the 25. Everyone agree? Now, Harsh, what's the authority that you're only going to be taxed on 15 of the 25?
661
No, that's the authority for the deduction.
661.
Inclusion is what code section, Harsh?
662.
662 what? A2. EK, what's your inclusion section?
661.
No! You guys are killing me.
661 A1.
No!
662 A1.
Inclusion.
You don't get a second chance, Carlo, in life. Come on. 662 A1 is tier 1 inclusion. 662 A2 is tier 2 inclusion. Guys, it's not that complicated. You don't have, right, Valerie? You know from income tax 1, right, the general income tax, you know, we're always searching for symmetry and we just can't always find it. In this course, you know, finally we're getting our destiny, we're getting some symmetry, and you guys are fighting me tooth and nail. There's tier 1 deduction, tier 2 deduction, tier 1 inclusion, tier 2 inclusion, right? All symmetrical, because that's the whole purpose, congressional purpose behind D&I. To make sure just one taxpayer gets taxed on the income, right? That's the whole purpose. So for your notes, for this second problem, there's a total of $65,000 deduction under 661, and there's a total of $65,000 inclusion. 50 to the wife, 15 to the discretionary beneficiary, in this case, the son. 3-18, guys ready? Up to this task? Simone, it's got your name on it. Okay, Dane, see if you agree with Simone. Suppose D&I is instead 35,000. Simone, what do you say?
There's no taxable.
So what do you say?
There's no allocation, zero.
So tell EK and Harsher clients, this is the fact pattern. Tell them either there's no tax, all of it's taxed, some of it's taxed. What's the effects? Jen just made a distribution of a total of 75,000, right? The facts stay the same, right? EK is still getting 50, Marsh is still getting 25, and Simone, you've been retained to tell them what they're going to have to report in their tax return and what the trust gets to deduct. So Simone, what does the trust get to deduct? Give me a number. Justin, see if you agree.
I think that the DNI for if the tier one was, if the tier one plus the tier two was less than the DNI, then there's no deduction.
So So you're saying they get, the trust gets no deduction? Justin, you agree or disagree?
No, I disagree. They get the 35,000.
Be careful of the pronoun they.
The trust.
Okay, everyone, right, we're very careful with our language here. Particularly, in this case, it would be better than they, okay? But the trust is even better than it. The trust gets a deduction under what code section, Justin?
661 A1.
661A1, it's a tier 1 deduction. Simona gets a tier 1 distribution deduction, but it's capped, right? Can't exceed D9. Dane, any inclusion here?
The 35,000 is taxable to tier 1 wife.
What's your authority?
662 A1.
662, A1. Tier 2 inclusion. I mean tier 1 inclusion under 662 A1. That's what it means. I know what Carlos is thinking. I don't get a second sheet.
Wait, Professor, I'm sorry, I'm confused. So there's no taxable, there's nothing included here, or it's only
Well,
the
we just
30?
said there's a $35,000 deduction
Okay.
under 661 A1,
Okay,
and there's a $35,000 inclusion
okay.
under 662 A1. Both are it's a tier 1 deduction, a tier 1 inclusion. Yes? And that's, seriously, when these issues come up in your tax practice, and you guys can distinguish a simple trust from a complex trust. If you hear a complex trust, think tier 1, tier 2, right? Unfortunately, the language dovetails with our brains, because when we think of tier 1, don't we think priority, right? Everyone in this room wants to be tier 1, right? No one wants to be tier 2, right? And tier 1, I don't know if you want this honor, you're going to get taxed before the tier 2, so it's kind of a mixed honor to be tier 1 in this context, but it sort of dovetails with what your expectations might be. You ready? 3-19. The trustee is authorized to sprinkle income and principal among the testator's wife and children. In a year in which both D&I and fiduciary accounting income in the trust are $50,000, the trustee distributes $30,000 to the testator's wife and $20,000 to the testator's son. None of the trustee income is tax exempt. What are the tax consequences to the trust, the wife, and the son? Okay, take a deep breath. Think about this, and let's go back. Don't say it out loud. We want to know tier 1, tier 2, deduction and inclusion. Don't say it out loud. Right, Ping, you got the honors here. And Ming, see if you agree with Ping.
The both. Wife and the son is a second and.
Say again,
second
say it
tier.
loudly.
So they are applied for 661 A2 and 661 662 A2. Inclusion, which is wife get 30,000, including her.
Let's start with deductions.
Deduction is 50. Is total.
What's your authority for a $50,000 deduction? And
It's
Ming, do you
6.
agree?
I think the deduction is 30.
You would limit the deduction to 30. You're saying it's 50, right, Ping? And why do you say it's 30? Does tier 1 or tier 2 mean?
Tier 1, 30.
Why? Where's the tier 1? Tier 1 is when there's required income distribution. Is there anything required to be distributed here? Yes or no? Is anything required to be distributed here, guys? Where does it say it's required? Authorized. It is not required.
Oh, okay.
Ah, there is no tier 1 distribution here. There is no tier 1 distribution here.
Yeah, here it doesn't say required, and here it says authorized. Yeah.
Circle these words, guys. They mean something. Look at this. Alicia's got the red pen out. Hey.
Question. So it says both the DNI and fiduciary accounting income are the same. And then right after that it says none of the trust income is tax exempt. Isn't that redundant, or is there something else to this that I'm not seeing? When it said the DNI and fiduciary accounting income are the same, to me it automatically meant that none of it is tax exempt income. Is there a case where?
Yeah, I understand your point.
Okay.
That's fine.
Okay.
Yeah,
Alright.
probably didn't need to include that. Be that as it may, there is no tier 1 deduction, right? Is there a tier 2 deduction? And if yes, paying how much?
50.
50, right? It's all tier 2, right? There's a $50,000 tier 2 deduction. Is there any tier 1 inclusion? No. Is there a tier 2 inclusion? 50. So this is tier 2 in its entirety. Everyone agree? Mimi, you got that?
Yes,
Now you got it. Okay, 3-19, except the trust DNI this time is 30,000. Okay? Don't say it out loud. I need to know the deduction. I need to know the inclusion.
What was the change?
Say again?
Sorry, what was the change in this question?
Now the DNI is 30,000. It's not 50,000. That's the difference. B, I know you're itching to go, and Carlos, see if you agree with B. What's the deduction here?
To the trust, 30.
What's your authority?
661. 661 A2.
A2, right? This is a tier 2 deduction, right? Right, Jen? Nothing's required to be distributed.
Yeah.
And the inclusion amount?
Same, 30.
And who gets taxed on what then?
Well, it should be prorated, so 3/5 of 30 is taxable to the wife, and
3/5 or 60% of 30 is 18,000,
right.
and 2/5 or 40% subject to tax to son. What's your authority? What code section?
662 A2.
Yep. 662A2. Everyone see that? There's not enough DNI to cover the entirety of the distribution, right?
I have a question. For the deduction, we're saying it refers to the trust get the deduction, right?
Yeah, we're just saying how much does the trust get to deduct, right?
And the inclusion is for separate people, like a beneficiary.
That's exactly what the whole course is about. And I'm not saying that facetiously, but that's exactly what our objective is here. One is reflected on the young hum. One is reflected on the 1041. That's the effect that, to the deduction. And the amount included is the K1 that will be issued to the beneficiary that you saw. Right, guys? That's what that's all of what Chapter 3 is about. Allocating income and deductions.
So K1 will always be inclusive.
Absolutely. That's all K1 does, is tell the beneficiaries what's included.
When you don't have the word mandatory there,
Required is a better word than mandatory. So keep going.
so when you don't have the word required in the problem, the income that is supposed to be distributed between two people in this example, you have to divide, like,
You have to prorate the DNI.
Alright.
The larger the distribution, the more the DNI will be attracted to it. The smaller the distribution, the smaller the DNI. But notice, this is not something like the expenses you get to allocate. Everyone agree? You get to allocate the expenses. This 30,000, Jen, you can't say, well, I want that 30,000. I'll issue a K1 to EK for 30,000 and 0 to harsh. In other words, if you're both tier 2 distributees, it's got to be pro rata. So there's no choice in the matter. Everyone understand? Congress doesn't want taxpayers to play games. All right, so everyone can handle those problems, and if you have a question, let me know. 3-21, a trustee is authorized to distribute 1/2 of the trust income and 1/2 of the trust principal to the grantor's daughter, and the other half both to the grantor's, and the other 1/2 of both to the grantor's son. Upon the death of either child, 1/2 of the principal is to pass to his or her issue. In a year in which the distributee's DNI is 10,000, the trustee distributes 10,000 to the grantor's daughter, but nothing to the grantor's son. None of the trust income is tax exempt. What is the tax consequences of the trust, the daughter, and the son? Assume that the shepherd share rule applies, and then assume that it does not. So, under two different assumptions here. Assume that the shepherd share rule first applies, and then it doesn't. So in your notes, or if you want to try this out, pretend for a moment the separate share rule applies, and then it doesn't. And what is the outcome? Well, if the separate share rule applies, this is treated as two separate shares, right? And if the trustee distributes 10,000 to the grantor's daughter, how much will she be taxed on? 5,000, right? What's my authority for that? This goes back to the regulation. It goes back to the separate share rule under Code Section 663C. Code Section 663C and the regulations thereunder. It's treated as if there was two separate trusts. Is she a tier 1 or tier 2 distributee? She's a tier 2, right? It's the discretionary distribution. And she would be taxed, the trust would get a $5,000 deduction under 661A2, and she would have inclusion of $5,000 under 662A2, right? And what about the remaining 5,000? That would be taxed to the trust. The son would have no tax. The trust would bear that $5,000 tax, and essentially that tax burden would be allocated to the son's portion of the trust. That's to be a little bit of a bookkeeping nightmare. So I repeat for your notes, if the separate share rule applied, daughter would be taxed on 5,000. The trust would be at least allocated, that 5,000 would remain taxable to the trust. The son would be taxed on 0. In contrast, if the separate share rule did not apply, if it did not apply, then the generic rule applies, which is distributions pull out D&I, right? Distributions pull out D&I, and the daughter would be taxed on the entirety of the $10,000. Why? It's a tier 2 distribution, but there's adequate D&I to cover it. B, go to question.
So it's tier 2, even though it says it's required to distribute. Oh, it says authorized, sorry.
Authorized.
I'm sorry, yeah.
Okay? Everyone have that? So it's important to know if there's a separate share or not, if it's truly to be treated as 2 separate trusts. Look at 3-22. Testamentary trust. As cash dividends of 10, interest, tax exempt interest of 10,000, capital gain of 80,000, right? Trust is required. Everyone, Alicia, you got that red pen out? Trust is required to distribute all of its income to the testator's sister annually for her life. The remainder is payable to the testator's brother. However, the trustee is authorized to distribute the principal to the testator's brother during the sister's lifetime. Okay? The word authorized. The trustee distributes $20,000 of the principal to the testator's brother. Calculate the fiduciary accounting income, gross income, tentative taxable income, D&I, section 660A1, 661A2, deduction and taxable income. Then we had to calculate under 662A1 and A2 the amounts taxable to the sister and brother. You guys up for the task? Let's start with the fiduciary accounting income. This is the amount, right? Where do you look to figure out the fiduciary accounting income? Principal and Income Act, not the Internal Revenue Code. This is where, if I can count on the table, the income beneficiary can demand these dollars, right? And who is the income beneficiary here, guys? The sister. This is the amount you can count on the table and say, I demand this. How much, Jessica, do you think the sister can demand here? All right, I'm just going to remind people again, the exam for next week, you cannot bring anything electronic. So hopefully you have a hard copy of the book somewhere, Jessica. How much can the sister demand, Jessica? Julia? John? Just give me a number. You're whispering. Going on?
I think it's 90.
To say it loudly?
90.
90? How'd you get it?
The cash dividend 10 plus the capital gain.
Is capital gain considered income?
No,
No.
it's only 10.
How much? 20. The dividends and the tax exempt interest. Everyone agree? The fiduciary accounting income is the $10,000 and the 10 of dividends and interest, 0 capital gain, right? What's the gross income here? 90, right? 10,000 dividends, 0 tax exempt, 80 capital gains, right? Tentative taxable income. Shank, this has your name on it. Shank.
It's 89,700.
Why is it 89,000? Is this a complex or simple trust, Shank?
Complex.
It's a complex. Everyone see it's a complex trust.
100 on it. There's exemption only 100 then, right?
Is it?
So, 643.
Dane, what's the deduction exemption amount here?
I think it's 100, I'm not sure.
You guys are killing me. Shank, it had your name on it because this is a complex trust, but it's required to pay out all income, right? So it's 300. Remember, a simple trust always gets 300 because it's required. A complex trust can be 100 or 300, but if it's required to pay out all income, it's 300. Shane, right?
Yep.
We did that. Been there, done that. So tentative taxable income is 90,000 less $300, $89,700. Code section 642B says if it's required to pay out all income, you get $300. It doesn't say if it's a simple or a complex trust. It just says required to pay out all income, $300. Okay, I'm going to keep my mouth shut. I'm going to try. I need 2 numbers from you. In the next 3 minutes, pretend it's the exam, I need you to compute D&I and modify D&I, okay? Compute D&I and modify D&I. Let's see if you guys are on this. Justin, what number do you have for D&I?
So for D&I, I have 20,000.
Okay. Julia, have a number? Gotta get ready for next week, Julia. Karen?
120 also, yeah.
Dave?
20.
Carlo?
The 20 as well.
What was your number, Carlo?
20 as well.
20 also? Okay, Carlo, tell us how you got it.
That's the interest and the dividend.
That won't, I mean, you can't just say that's D&I. That's gonna get you in trouble. How do you compute it, Karen? Justin, you had your hand up.
Start with TTI. It's 89,700 plus the personal exemption
What's your code section authority for doing these? What code section governs D&I computation? 643, right? You take 10 to the taxable income plus the exemption, plus the tax exempt, minus capital gains, right? Carlo, that's the way to do it, right?
Yep.
Carlo, what's modified D&I? Remember, in Schedule B, this gets you halfway, but now we need to know what's the actual amount deductible. And B, what number is that? 10, because you subtract out the tax exempt income, right? So the deduction is going to be limited to $10,000. Everyone agree? So now we're going to go theoretically back to the front page of the 1041, right? In the front page of the 1041, we're going to have our, let's compute the tax liability of the trust. The tax liability of the trust.
What do you mean by tax liability? The taxable income?
The taxable income of the trust. So, Alicia, what would it be? Well, how would we compute it?
Minus the deduction.
Just say it loudly because everyone's behind you. No one's in front of you but for me.
So it's gonna be, the gross income minus the deduction.
And everyone, just give me numbers.
It's gonna be 90K minus 10.
Would you agree or disagree? Marsh? Jen? Ping? What do you start with to compute taxable income? V?
TTI.
Say again?
TTI,
TTI. So what is that?
89,700.
89,700. Keep going.
And you subtract what you give out to the beneficiary that is not tax exempt.
Right, 10,000. Your
Right.
modified D&I. And the tier 2 distribution here, right, is 0, right? There's no tier 2 distribution. So it's 79,700.
I'm sorry, what does the 0 represent?
One second, let me just remind myself that in other words, the trust is required to distribute all of its income to the testator's sister, right? That's all a tier 1 distribution, right? So the $10,000 deduction, this is under 661A1. Everyone agree? The $10,000 deduction is 661A1, and there's 0 661A2, right?
Okay, so despite the fact that they actually didn't distribute her anything, it still gets the deduction and she's still being taxed for the
But
BNI 10,000.
when you say that,
Because it says that.
she is going to get the money. She's going to get $20,000.
The trust distribution is
Right.
the brother.
No, she didn't know.
The trust is required to distribute. The sister's going to get $20,000.
It's the brother.
The brother's, the remainder is distributed to the brother.
Hold on.
Uh,
The trust is distributed.
20,000, and the principal, he's not going to be taxed on anything, right?
What does it say the sister
My sister did not get.
She's
gets?
going to.
322.
The trust is required to distribute all of its income to the testator's sister. She's going to get $20,000. Everyone agree?
No.
Because that's the fiduciary accounting income. Agreed?
My brother.
In addition, the trustee distributes another $20,000 of the principal to the trustee's brother,
Oh,
not to the trustee's
okay,
brother,
so if
to,
it's,
to the testator's brother.
because it doesn't say she is getting, okay, but even she requires, she must.
She must. But we're not done yet. Now everyone understand, Valerie, you'll appreciate this. This is what's gonna show up on the face of the 1041, right? This is what the trust ends up bearing the tax burden. Again, your computer software will tell you the actual liability associated with the 79,700. It's going to be subject to the capital gains rates.
Line 22.
Say again?
It's line 22.
I don't know offhand. It's. Let me just look and. Yeah, line 22. Now we need to know what's taxable to the beneficiaries, right? And Valerie, where will this number appear? On the K1, right? Everyone agree? So who has to, between the sister and the brother? The sister will report how much? Someone's whispering. Ping, you were going to say?
Dividend 10,000.
Of how much?
10,000.
She'll have to report the total of 20, right? But that's comprised of 10,000 of dividends and 10,000 of tax exempt, right? Which won't show up, but they'll get issued a K1 showing that.
Yes.
How much will the brother?
0.
0, right? Because her required distribution absorbs the entirety of the D&I, so there's 0 D&I left with respect to the Tier 2 distribution, right? So for your notes, sister gets taxed on 20, brother gets taxed on 0.
Well, sister.
Did I just say that? Sister gets taxed on essentially 20, 10 of which is taxable dividends, 10 of which is tax exempt.
So we can say just 10,
What
right?
would be the
Only
question
10.
of the
10 for your notes.
So what would be the question of the exam if you want 20, and what would be the question of the exam if you want 10 for the sister?
You'll just clarify. You'll put 10 of the dividends, 10 of tax exempt.
Okay.
All
So
right.
again, what would be the question? What would be the taxable? That would be the question?
I had to formulate it.
Okay, you don't know.
But
Okay.
we'll all be on the same wavelength, and I won't disappear during the exam. So if you think I misphrased the question, you can take me to task. Sounds like you're looking to take me to task.
No, okay.
It's okay, it's okay. I'm looking to take you to task. It's fair. All is fair in love and war. All right? 3-24. You ready? No, I apologize. 3-23. I don't want to skip anything. 3-23. Trustee is authorized. Notice the word authorized. Trustee is authorized to sprinkle. That's a cute term, right? Sprinkle. Sprinkle income and principal among the testator's children. However, the trustee is directed to distribute $30,000 to each child on his or her 30th birthday. During the year which the testator's daughter turns 30, the trust has $45,000 of D&I. $30,000 is distributed to the testator's daughter and the testator's son. What are the tax consequences to the trust, the daughter, and the son? Think for a moment.
So, how many children does he have?
I think 2.
Oh, okay.
Now, I just want to, as you're answering this question, take a look at code section 663 for a moment, if you don't mind. New code section. A1. There shall not be included as amounts falling within section 661 or 662 any amount which, under the terms of the governing instrument, is properly paid or credited as a gift or bequest of a specific sum of money or a specific property, and which is paid or credited all at once or not in more than 3 installments. Now, from your income tax days, if I told you someone was going to receive a $30,000 gift or bequest, right? You guys would tell me, not taxable. Everyone agree? What's your authority? Code section 102. And code section 663 is an affirmation of that. It's sort of like in subchapter J, it's saying, don't get carried away, right? Notwithstanding all your new knowledge, don't forget code section 102. Everyone agree? It's an affirmation of code section 102. So in responding to question 3-23, what about this $30,000 the daughter gets on her 30th birthday? It has all the aroma of falling within code section 663. Okay? A. And if it does, it's not part of 661 and 662. Okay, I repeat. Look at the language of 663A. It says there shall not be included amounts falling within 661A1 or A2, or 662A. In other words, it doesn't qualify as a tier 1 or tier 2 distribution. It's just plain vanilla tax-free. So for your notes, the 3-23, the distribution to daughter should qualify under 663A1 as tax-free and not under tier 1 or tier 2. So what are the tax consequences then of the $30,000 distributed to the son? How would you treat that? Say again?
The same, why
Well, he didn't get it, it's not his birthday, right? It's a discretionary distribution, right, from the trust. What would you call it? V?
DNI.
Say again?
Well, it's DNI to the son. I mean, it's taxable income to the son.
Because it's what kind of distribution?
Fiduciary accounting income. No,
It's
sorry.
not fiduciary accounting.
Sorry. Tier 2.
Tier 2, everyone agree? It's a tier 2 deduction, it's a tier 2 income. Because this is discretionary on the part of the trustee, right? And then how would the trust get, how much of a deduction would the trust get? 30. EK would be a $30,000 deduction. How much is included to the son? 30. Which means how much will remain taxable to the trust? 15.
Could you go over back the 663 with the daughter?
663 takes off the table any specific bequest, any specific dollar amount that's bequeathed or left to that meets the qualifications under 663A1 is not under the distribution regime of tier 1 or tier 2, Carlo.
Okay.
And that $30,000, if you didn't sit in this class and you were just in tax 1, you guys would say, oh, that's exempt under 102, right, Carlo?
Right.
But 663 affirms that, and it's taken off the table. That means that essentially we have a trust here with D&I at 45 and one tier 2 distribution of 30. That's it. So the author's point in this question is saying any 663 specific request is off the table. Doesn't become part of the equation here. It's a distribution of principal, essentially. It's not going to carry out any D&I.
What's the purpose of 663B?
663 what?
B, where it says that distributions in the first 65 days.
That's called the 65-day rule, which we'll look at. Is sometimes at the end of the year, if you have a calendar year trust, it's hard to know how much income the trust earns on December 31st. maybe by February 15th, you know how much income, so you can make the distribution and treat it as if it was made in the prior year.
You have to follow that if you don't
No,
want?
it's elective.
Okay.
It's elective. Young Hung?
For this question, are you saying for daughter is treated as 663 and for son is the tier 2? But what's
It's treated as 663 to the daughter, and for the son, it's treated as a discretionary tier 2 distribution.
but where, what's the language can help me to determine it's for daughters?
The language that determines for the daughter is says, she turns 30, she gets $30,000, right? Okay? Okay? 3-23. 3-24. Assume the terms of the trust require a trustee to distribute $10,000 annually to sister for life. The terms of the trust also require but do not authorize. Notice the word authorize, Alicia. But do not require, right, Alicia? The trustee to distribute the principal to the trustee's brother during sister's lifetime. And in the year in question, the trustee distributes $10,000 to the sister and $7,000 to the brother. Assume that both D&I and the fiduciary accounting income are $12,000 and none is tax exempt. What are the tax consequences to the sister, brother, and the trust? So she's required to get $10,000 per year. How are we going to treat the annuity? Is it a tier 1 or tier 2 distribution, guys? Tier 1. The regulations make clear that an annuity, I'll give you a site, 662A-2C. I'll repeat. Regulation 662A-2C treats the annuity as a tier 1 distribution. So therefore, how much of the D&I is absorbed? 10, right? Everyone agree? 10,000 is taken because what kind of distribution is the brothers? Say it's a tier 2 distribution, right? It's discretionary, right? So how much is going to be taxable to the sister? How much is taxable to the brother?
0.
Why is it 0?
Because it's principal.
2,000?
No.
5?
Shouldn't it be like 2K taxable to the trust and 7 non-taxable to the brother?
Hold on, say it again.
The brother is getting principal, all right?
But it always carries out D&I to the extent there is D&I.
Okay.
You know, D&I is D&I. You call it income, you call it principal, it doesn't matter. D&I trumps everything. So tier 1 distribution, tier 1 deduction is 10,000, right?
Yeah.
Tier 2 deduction, right? There's how much D&I?
12.
2 left over.
So there's only 2.
Yeah.
So there's a deduction of $12,000 total. The sister would be taxed on 10. The brother would be taxed on 2.
And it really doesn't matter that he gets principal.
Doesn't matter if he gets principal, he's getting none. Doesn't matter. I mean, that's what D&I is all about. There's no tracing.
Shouldn't trust.
So why can't the trust just keep, there was a case where the trust kept part of the D&I?
Yeah, that's because if you recall, the tier 2 distribution was less than the remaining D&I. Okay, so if your notes 3-24, sister's taxed on 10, son is taxed on 2, or the brother's taxed on 2. 3-25, assume the terms of the trust require the trustee to distribute $10,000 annually to sister for life. The terms of the trust authorize but do not require the trustee to distribute principal to brother and sister during the sister's lifetime. In a year in question, distribute $25,000 to sister, $10,000 to brother. Assume both D&I and fiduciary income are $12,000. Then none of this income is tax exempt. So same facts, except how much is tier 1 and tier 2?
Tier 1 is 12.
tier one is 10.
10,000, right?
Yeah.
So how much are tier 2 distributions?
2,000 in total for you to pro.
Hold on, slow down. The tier 2 distributions are 15 to sister, right? And 10 to brother. Everyone agree? That the sister's getting a tier 1 of 10 because that's required. Everything else is tier 2. So the remaining 15 is tier 2, and the brother's is 10. Those are tier 2 distributions, right?
No, I'm lost. I
Yeah.
didn't even finish reading and analyzing the question.
The sister is getting a 10,000 tier 1 distribution. In addition, she's getting another 15,000. That's discretionary. That's a tier 2. The brother is getting 10,000. That's all tier 2. That's all within the discretion of the trustee. What's the total tier 2 distributions? 25. That's just simply the 15 plus the 10, right? The 15 to the sister, the 10 to the brother. Last I checked is 25. How much D&I is left for tier 2 distributions?
2.
Only 2, right? Tier 1 absorbed 10 of the 12. Everyone agree? Tier 1 absorbed 10 of the 12. So what that means is there's $2,000 left. 2,000 times 15 over 25. 2,000 over 10 over 25.
1,200.
So 800 will be taxable to the brother, 1,200 to the sister, because she's getting a larger amount of the tier 2 distribution. She's getting 15 of the tier 2 distributions. The brother's getting 10,000 of the tier 2 distributions. So the trust gets, John, what's the total deduction to the trust? Give me a number and then Young Hong, see if you agree. What's the total deduction to the trust? Say again?
I don't have that.
Young Hong, what's the total deduction? 12, right? 10,000 tier 1 deduction, 2,000 tier 2 deduction, right? All right? What's the total inclusion amount? Here's a shocker. 12. No one should have hesitated, right? Because we're all living in symmetry. You guys are on a roll. We did 3-25, right? 3-26. Assume the same terms of the trust require the trustee to distribute 1/2 of all income to annually today. Stop. What kind of distribution is that?
Tier 1.
Tier 1. Tier 1, fear not. The terms of the trust also require the trustee to distribute $30,000 annually to B. Tier 1, Tier 2.
1.
Tier 1. The terms of the trust authorize but do not require. Alicia, what kind of distribution sounds like? Tier 2. The trustee distribute any remaining income or distribute principal to C or D or both. In the year in question, both D&I and fiduciary accounting income are $80,000, none of which are tax exempt. Thus, trustee distributes $40,000 to A, $30,000 to B, and $30,000 to C. The latter two distributions are charged to principal, which doesn't mean much if there's D&I. Well, what are the tax consequences to all three of them? So A and B are tier 1. And how much is A going to get? 40, right? she's entitled to 1/2 of the fiduciary accounting income. Agreed? A's gonna get 40, B's gonna get how much? And how much D&I is there?
80.
Okay, so how much D&I is left? 10. Okay? So, and we know $30,000 is going to C. So, what are the tax effects to A, B, and C? A is going to be, first of all, John, I got to ask you again. What's the deduction that the trust will get? Give me a dollar amount.
70.
Is that true, young home? 80. You got to add the tier 1 and the tier 2. Under 661 A1 and A2, you get a deduction for tier 1 and a deduction for tier 2. Right? 80 is the deduction. John, you want to take a wild guess how much is included total? 80. EK, how's that 80 taxed to whom?
40,000 to A,
Right?
30,000 to B, and
Yes?
10,000 to C.
Yes! Music to my ears. A gets taxed on 40, B gets taxed on 30, C gets taxed on 10. Let's just turn the page. Okay? On page 188, estates. This case, Bohan wrongly decided. This is just plain wrongly decided. An estate made a distribution, and this court, 8th Circuit, some bright people, not bright enough. They essentially said, look, when an executor makes a distribution, an executor can always call back the money, okay? Always has a right, if there's subsequent creditors, to call back the money. So therefore, even if the trust made $1 million and made a distribution of $1 million, well, that's all tentative because the executor a year or 2 later could call back the money. But that's not what Congress had in mind. Congress had in mind that if the estate makes a distribution, yes, it could always call back the money, but chances are it's not going to call back the money, and the estate should, right, under 661 and 662, there should be a deduction and an inclusion, okay? So it's a nonsensical result because if you take this outcome, in this case, to its natural conclusion, you would never, until the year of termination, this 661 and 662 would never apply to estates, which makes no sense. So if you read the material in Bohan, you'll see there's no logic to it. It's flawed. And then there's a case, Johnson, on page 193. And all that says on page 193, that case, is that you can't just have a book entry, okay? You can't just have a book entry. A book entry does not suffice. That it must actually be paid out to qualify. That if you want a deduction as a tier 2 distribution, a book entry doesn't suffice. Shocker, okay? Must be paid out. And finally, and we'll call it a night on page 196. This is a discussion of exclusion for particular benefits, okay? This is where I spoke to you before about, an affirmation of Code Section 102. The material in the textbook is hard, okay, admittedly. But, and I feel at liberty to ask you these questions if it comes up on an exam. Don't get mad at me. But let me just give you a hint that if you go to the, authors cite you to the regulations under 663, this is on page 196. 663A1-2-3. Everyone see that? 663A1-2-3. There are several examples. Very, in my opinion, easy to follow examples under 663A-1. If you look there under B3, there's 3 simple examples. And if you keep reading under C, the C2, there's some, again, 3 simple examples. So even in my absence, if, time is not going to afford us the opportunity to go through this, please go through these examples. They're very easy to follow. And it essentially says that specific dollar amounts that are left to people will not carry out D&I. Okay, I repeat, because when you get a specific bequest, of money under the terms of a will, do you expect to get a K-1 saying you're tax wanted? No, because you learned 102 says you're not tax wanted, right? So that's what these examples try to illustrate, okay? So please, I can't go through them, we don't have the time, but I will hold you responsible for exam purposes. And if you get lost, again, for those who came in a little bit late, I will be around the entirety of this week. Shoot me an email, tell me you're lost, tell me, just don't say I'm lost, okay? That doesn't help us. Tell me why you're lost, what problem you're lost with. Again, everyone knows my mantra. I want you guys to succeed. I want you to know this stuff. Don't get lost in the little stuff. Get the big picture, because the exam's only going to cover the big picture items, okay? So I'll see everyone here 6 o'clock sharp next week, okay? Good luck studying.